Time to move on. Stocks on the editor's radar. So let's put the spotlight on what analysts are really looking at. Which are the stocks that are on their radar and which are the stocks that they have a sell rating on? And does this list and the kind of returns, Nikunj, that analysts are betting on surprise you or come as no surprise? Sunteck, Sobha, VIP?
No, so these are, pretty much we've looked at the consensus view here.
Yeah.
Sobha has 18 brokerages which cover it. 18. I didn't realize it till the time I saw the data. VIP Industries, 12 companies or 12 brokerages, they track it, and then you got 10 ratings even in Sunteck Realty. These are some of the stocks where analysts expect that even after the recent run-up, the recent upside could be strong. Is there a common theme which I can weave here? Real estate, a builder. VIP Industries, odd one out in terms of, look, it is it is not FMCG, but it is a consumer discretionary place, so to speak. But I'm getting a sense looking at this data, if you really want to conclude something, is that real estate, I think, is one sector where analysts have turned bullish, fund managers have not turned bullish, and retail investors, because they've lost money in the last leg of sell-off, which happened a couple of years ago, almost a decade ago. But you don't lose, public memory sometimes cannot be that short, especially when you lose money. I think this is one sector where return potential versus participation is still very low, and especially in some of the mid-cap real estate stocks. So if you're hunting for one sliver of mid-cap stocks now offer value, where there's potential of re-rating, real estate and mid-cap real estate could be one of them.
Okay, that's the view coming in on the stocks that analysts are betting on. But let's also find out the list of the stocks that the analysts believe should not be touched with a barge pole, or basically their cautious calls. And there was a Vodafone idea on this, and the likes of an MRF perhaps having run their course, Yes Bank, BHEL, there was a bit of a run-up and then the stock cooled off.
Yeah, again, the consensus view seems to be indicating that markets are just not pricing in where the puck actually has moved. And purely for our audience, I think there are two stocks where in a sense are patronized by HNI investors and by retail investors. One is BHEL and second is Yes Bank. Now Yes Bank of course has gone through its, they actually survived thanks to how the collective effort of banks managed to bail them out at peak of COVID crisis. But post that, even though PE investors have stepped in, I guess the big turn in Yes Bank has not happened. So one should not be in a hurry to buy Yes Bank because other banks have gone higher. See, the normal temptation for retail and HNI investors is that banks have gone higher. Yes Bank has not participated, it has to participate. For Yes Bank to participate, I think they have to deliver, and I think the delivery for Yes Bank is still a distance away. They're looking at making a comeback in terms of rebranding, getting the book quality right. So this is work in progress. But you should not buy Yes Bank just because other banks have gone higher. BHEL, I've always had my reservations that why that stock is going higher. Kunal will not agree with me. I know it's a technical breakout there. But BHEL in my book, I think is one stock where you track it more than me, where you know that they've underbid for that entire railways order. Their business per se is going through and restructuring right now. They've lost their old competitive mojo. So fundamentally speaking, I guess if you own BHEL, sell it. If you don't own it, don't be in a hurry to buy it.
Yeah, because the maximum ratings as well for a cautious stance was on BHEL.